and welcome back to my YouTube channel. My name is Anu Joshi and I'm a real estate broker based in Toronto and the GTA. On today's video, I am welcoming my friend and colleague Charlene Ward, who is a mortgage agent based in Toronto. Welcome, Charlene.
Hi, thanks for having me.
Yeah, of course. Welcome back to the channel. I know you've done some features with us before. Super great value add for our audience. So thanks for agreeing to do this one as well.
Thank you. And I just have to say, I love watching you in your element. When you do your intro, you're just so passionate about it. I love it.
Yeah, thank
I'm
you.
here for it.
Awesome. Charlene, today we wanted to talk about the mortgage qualification process. As the spring market opens up, people are getting more comfortable with the lending environment, with the interest rate environment, and they're getting back into the market. So tell me, for a first-time buyer or someone who hasn't done a mortgage in a long time, how does the mortgage qualification process today work?
Yeah, so mortgage qualification process, of course, there's a stress test that we have to qualify with. And so in terms of being able to qualify, the things that lenders are going to look at is they're going to look at your credit because that is going to determine how you're going to pay them back once you are closing on your mortgage. So that is one of the things. Another thing is your down payments. There is a minimum for down payments. For those who don't know, I will kind of go into it. So anything under 500,000 is going to be 25,000, so 5%. Anything from 500,000 to just under a million is going to be an additional 10% added on to that 5%. And then anything over a million is going to be minimum 20% down payment. That, of course, varies depending on different situations, like if you're buying a corporation, like we were talking about earlier, things like that. But for the most part, for first-time buyers, that's what would apply. And then, of course, there's income that we have to take a look at. So they want to see that your income is consistent. Even if you just joined, let's just say 3 months ago, they want to make sure that you're salaried, not that you're hourly, or even if you are hourly, that you're guaranteed a certain amount of hours per week, just to make sure that that is solid income they're looking at. Now, in terms of qualifying, I'd say there's a lot of people that like to put in large down payments if they're able to, because it really is able to bring their mortgage amount down so that their mortgage payment is more manageable. So that's one of the things. Another is being able to add like a co-signer to be able to qualify, which is what I advise mostly when there are people that are looking for different avenues to be able to qualify, because maybe the first time around they had a bit of a hard time.
Right.
So if you were to ask me between income and down payment, what would really hold more weight on your application, it would definitely be more income, because the more income there is, the more mortgage you're able to afford, as opposed to adding a down payment.
Right. Yeah, that makes sense. And I have a lot of clients, especially first-time buyers, and for the most part, they're doing a really great job on their credit, and their income is usually very good. The household income, whether it's a single buyer or a couple, their income is, what it is. Income also, we can't change it, every 3 months. It necessarily doesn't go up annually, or it doesn't go up at the rate that properties are going up, and so that's usually like a fixed sort of value there. Aside from that, the two things that you talked about, one was down payment, and the other was obviously you have to qualify at the stress test rate, which makes it difficult, right? Because our variable of the income and the credit is sort of fixed. Can you talk to me about down payment? For example, if someone doesn't have they only have 5% saved up, if they don't have the 10, 15, 20, whatever's required as per the stress test, what can they do?
If they don't have enough of a down payment to qualify?
Yeah, or if they want to increase their down payment to qualify for either a higher mortgage or to bring their payments down, as you mentioned.
Yeah, definitely. So one of the really popular things over the last course of a couple of years, since really the pandemic, that's really been popular is gifted down payment. So this has to come from an immediate family member. And this is essentially when you receive down payment, a portion or all of it from like a blood relative, which allows you to be able to take that, put it towards your down payment, but not as a loan. It has to be in the form of gifted funds. It's not to be repaid, is what the lender likes to determine.
Right.
So like I said, it's going to come from your mom, your dad, your brother, your sister. And then essentially what happens is once you have confirmed that amount that's coming in, what happens is they need to see that in your account deposited, and they need to see a gift letter. So a gift letter essentially is something that comes from the lender, and it determines that the gift was received on this date in your bank account. This is your name. This is the person who gifted it to you. This is their relationship to you. And just basically confirming that it's being given to you in good faith and not as a loan to be paid back.
Right, because if it was a loan, then that would be have to calculate it into their, debt service ratios as an outstanding loan. And how many situations have you seen that actually pan out by listing an additional, huge loan on the mortgage application?
You know what? Not very many, because we
Yeah,
do like to advise against that, because if you're already having a hard time qualifying, the last thing we want to do is add to your debt.
correct, correct. So the gifted down payment must come from an immediate family member. Friends can't do gifted down payments, correct?
No, but if you did have a friend that did that, that's a very good friend. I will say
That's
that.
an excellent friend to have.
That friend around, but no, unfortunately, it can't be a friend. And another thing I didn't add to is that it can be here from Canada or it can be from overseas. From overseas, there is a bit more paperwork, like wire transfers and things like that to
Yeah.
confirm, based on anti-money laundering, but it can be done from overseas.
Right, overseas gifted as well from immediate family again. Okay. Okay, great. So that's I guess the bank of mom and dad, as you mentioned, is super popular. That's like sort of the term that's been coined. Question for you, which even people that are familiar with gifted payments, gifted down payments still ask, can parents take out equity from their home, for example, from a HELOC, and give that to their child as a down payment? They're still gifting it, but it's not from cash resources. It's from, technically, the HELOC is a loan on the parents. Is that okay?
Yeah, yeah. If it's okay so long as the parent isn't on the mortgage, right?
Yeah.
Because if they're on the mortgage, then we have to qualify them and use those debts into the application.
Right.
But if they're not on it, then it wouldn't really affect the application.
So if a parent picks up the money from their HELOC and gives it to their kid not as a loan, as a gift, then the
Mhm.
kid can use it and it doesn't impact their mortgage, correct?
Exactly.
Excellent. Nice. Then the other thing that I get a lot of questions about is the stress test. And I've explained it multiple times. I've talked about it on my channel. I talk about it with all the clients because, again, education is number one. And I know that you, transact in the same way. You talk to your clients about and explain what's going on. So just a clarification point. Can you explain just in super easy terms what the stress test is and what impact it has on mortgage qualifications today?
Yeah, so the stress test right now, when it originally came about, it was more to add as a buffer, and I think it's a good thing considering what we've been through right now. And so essentially, what it is it's qualifying at the rate that you're at plus 2% to add that buffer in the event of a default or anything like that, to really make sure that you really qualify to be able to make those payments.
Yeah.
Right now, we have heard like talks, but nothing really in like nothing really solid to confirm that the stress test will be removed. But I have heard people say that they do think it's necessary right now, just based on, or in the near future, just based on, the fact that it's really over preparation, in terms of qualifying clients.
Right.
So that is what the stress test is. But there is an option, which I believe I had mentioned to you before, and I made a video about this too, where you can actually qualify without the stress test. So it is at a higher rate because it is at an alternate lender,
Okay.
but you're not qualifying at the rate plus 2%, which essentially gives you a bit more leeway to qualify for more. There are fees involved as well
Right.
for the alternate lender, because B lending is always involves that, but it definitely allows for more leeway if you just need a little bit more of a squeeze to qualify.
Okay, that's interesting. So in that case, though, even though you're getting around the stress test for that specific lender, you still have to have like the income and the down payment and the credit to qualify you still, right?
100%. Yeah, you would still have to have provable income and all of that.
Okay, excellent. All right. Well, thank you so much for just running through that mortgage qualification process. I know that even in the industry, it's always changing and it's case by case. One client can look completely different from another client, even if they're, just purchasing down payments and credit and even off by a few points. I know that certain lenders will look at and others won't and all of that. So I know everything is on a case by case basis, but thank you so much for providing that overview for anyone that's interested in just learning about what the process is before getting into it.
Yeah, of course. Also another thing I'll add too is that there's so many other types of income that you can use. Like if you have children, child tax benefit is a great thing too, So it's just good to explore those options with whoever you're working with.
Yeah, absolutely. And who you work with definitely matters, especially in a changing landscape like this. It's always good. I say it to my clients or people that are interviewing to be my clients. Shop around, talk to a couple of realtors, talk to a couple of mortgage agents, and see who is able to work with you and if it's a fit, because that's super important.
Definitely.
Yeah, awesome. Well, thank you everyone for watching this video through to the end. If you have any questions about mortgages, you can reach out to Charlene. I will put all of her information in the description box below. If you have any questions about real estate, feel free to reach out to me. My contact information is also in the description box. And if you thought this video was helpful, please give it a thumbs up and please subscribe to the channel because I do post new and informative real estate videos every single week. Thank you everyone for watching, and thank you, Charlene, for being here.
Thank you. Bye, guys.
Bye.